thank you very much, IIF, for coordinating today's event. So delighted to be here, and it was no lack of topics that we thought of what should we add on to the agenda today, because there's so many different things to talk about. But we said that we wanted to focus in a bit on striking the balance between intervention and innovation, specifically how technology-driven innovation and public initiatives fit together. And to do so, we looked in our network and the payments leaders in the industry. And today we invited 3 esteemed payments leaders to share their insight on the road to widespread adoption of real-time payments in local markets. We really believe that real-time payments hold one of the main keys for the future of cross-border payments. And during the discussion today, we will look at the role of intervention in driving mass adoption, but also a little bit if and how are there any downside with interventions. And we will as Victoria was talking about, we'll talk a little bit about this task force, the legal, regulatory and supervisory. What perspective should they take into their work when they're stepping in to do some heavy lifting over the next 12, 24 and 36 months? So with further ado, I'm going to introduce my panelists today. So I say welcome to Dilip Espe. Dilip is the founder and managing director and the CEO of the National Corporation of India, NCPI. So I think several of us on the line know them well. They are an initiative by the Reserve Bank of India and the India Banking Association that was established in 2014, and NCPI is the umbrella organization for all retail payment systems in India, including UPI, which I think has really become that poster child in the world for real-time payments. And they continue to impress with their growth story, year-on-year growth around 80% in the fiscal year 22 to 23. The total transaction volumes was over 83 billion. And I think, Dilip, if I'm right, your moonshot is 1 billion transactions in a day. So welcome.
Thank you.
And then we have our next panelist is Lars Sjögren. He is an EPAA ambassador, but more importantly in the discussion today is that he is the former CEO and the founding CEO of P27, which is a project initiated by the 6 major Nordic banks to establish a common clearing platform for payments in the Danish krona, euro and Swedish krona, a single pan-Nordic payments infrastructure. And Lars left P27 in 2022 and sits on several boards today, and he's also a senior advisor for McKinsey. Last but not least is Mei Lam. She's also on the EPAA advisory board, but today here in her role as CIO for AP Plus. And AP Plus is the entity that brings together the 3 domestic providers of payments in Australia, one which is the new payments platform, which was established in 2018 and is the real-time payments platform. And previous to AP Plus, Mei was a partner for EY, focusing on growth in their payments practice in Asia. And prior to that, she held several C roles in Australia, Paytex domestic. I think it's important I'm setting the scene on their backgrounds, because what we're going to talk about today is really what they have lived through. So you need to know where they're coming from. But let's dive into the discussion. And looking at Lars, you are in a market that having intervention coming its way. So the EU has put forward a proposal to enhance the availability and affordability of real-time payments transfers. So can you give us a view of what effects this new regulation might have?
But surely, and good morning, good afternoon to and maybe good evening to anyone listening in on this. Yes, I have, I would say, first-hand experience in what it actually takes to build a payments infrastructure bottom up, and also then having the ambition actually to I would say sunset the existing infrastructures and do that across multiple jurisdictions and countries and currencies. And I can tell you that is actually quite difficult. The Nordics, I think that many people look at the Nordics and say, guys, you have a lot of instant payments there, and in a way we do have, because but it's driven of mobile wallets, basically, P2P use cases, not really having an infrastructure that is super up to date when it comes to processing other use cases. And in Europe as a whole, I think it's fair to say that Europe is clearly behind. If we look at UPI, India, Brazil, other large parts of the world, Europe today is actually quite behind on instant payments, and I think 11% of transactions in Europe today is an instant payment. And the European Commission, together with the ECB, they have tried to address this, and they already back in 2019 launched various initiatives to promote instant payments, and ECB developed the TIPS platform to connect various domestic infrastructures and banks predominantly. And I think that what we have seen is that not much has happened, if I'm a little bit blunt, and I think that is what is the backdrop to ECB's and the Commission's proposal to actually more or less mandate all banks to connect to the TIPS platform to get the reach. And also say that if you do process payments in euro, you also need to offer instant payments. That the cost of instant payments must not be higher than traditional local transactions in euros. There's a lot of obligations when it comes to verify the IBAN numbers and names, a sort of a lookup service. They also come in and say that there are many ways where you need to sort of remove friction, which I think is all fine. And then all payment channels must offer instant payments. So basically, the Commission proposal that just recently has been updated, and I think it will be put into legislation fairly soon now. It will give all banks in Europe and also PSPs doing euro transactions with Europe, they will need to adopt to this. And of course, you could say that this is all for good, because we know that the instant payments are actually driving growth. It is driving innovation. So there are so many good things around this. But at the same time, here we have sort of the central governing body in Europe stepping in and say, guys, all the infrastructures you have, they can live their life, but this is now how you need to work going forward. So I think that this is basically the instant payments proposal. There's much more to say about this, of course, but I will stop there, Camilla.
Yeah, so I can sense a slightly concerned that you're not completely sure if this is right or not. So I'm just going to turn to Dilip, who lived through this and have seen a remarkable uptake in India and a lot of positive impact. But how was the first reaction when you see the UPI incentives was brought out, Dilip?
Hi, Camilla. I hope you all can hear me.
Perfect.
See, India is a very, very different market compared to what you see Western Europe or any developed economy, right? Before UPI, we had about 3 million merchants who could accept the digital payments. And overall, we believe, the merchant community is in excess of 100 million merchants. And obviously, majority of them are the individual merchants, right? So you could look at mom and pops, you could look at vegetable vendors, street vendors, and fairly the low end of the pyramid. And when we look at the payment system, technically with the charges, the payment system can never reach to them, right? And it's not about, they paying 10 bips, 20 bips, 30 bips charge, right? It's all about if they sell for 100, whether they get the 100 back or not, which is the cash experience, right? And with this intention, the government, who was very, very keen to proliferate the digital payments, announced that the merchant discount rate is going to be 0 for UPI, right? Obviously, there are two types of transaction, P2P and P2M, right? And I think even before, the P2P transactions were never charged, right? So the P2M transactions was trying to fund the entire ecosystem for the overall UPI. Now, when you look at the zero MDR, the zero MDR kind of helped UPI in last few years to reach to about 50 million merchants accepting the UPI. Yeah. 350 million consumers using it, right? Because the majority of the consumers live in the tier 2, tier 4 towns of the country. And unless they have the supply, they, even if they are digitally enabled, they can't make the payment digitally, right? So, so the government intention was this. However, we were going back to the government, the ecosystem, and requesting that, the government's intention of small merchants accepting the UPI is very good. And what we were requesting to the government, is there a way by which the large merchants who are already accepting the debit cards, credit cards, and paying the MDR, can they pay the MDR, and which kind of subsidizes for the overall UPI ecosystem? And obviously the government has a view, and government instead of as of now, the government is providing some incentives, right, to subsidize the ecosystem on UPI. I'm sure that the government is thinking very progressively. Government is looking at to get more users and more merchants inside the fold, right? So the government doesn't want to create any resistance, because government has seen the benefits of increasing the transparency. India has been predominantly the cash economy, unlike Europe, right? And today we have seen the growth of cash is declined. The cash has not reduced in the absolute term, but the way economy is growing, the growth rate of cash is reduced. And I am sure at appropriate time, the government will consider our ask of levying the charges to the large merchants, but continue to provide the service to the small merchants. So that's the situation right now. And fairly, we are trying to look at what are the best way out, and what are the additional services. Today, we have launched credit on UPI, which is remunerating, right? So variety of payment instruments are operating on UPI. So customer can use his own money, which is free right now. Customer, which is incentivized by the government, but now customer can use the credit money, customer can use the prepaid money. So on both the places, the ecosystem makes money, right? So there are ways and means we are trying to work around to the situation, and also the government is kind enough to provide the incentives for this stopgap period.
So it's a long-term plan to innovate on top of the rails to profit margins to actually can then be fed back into the infrastructure. Am I hearing that right? Yeah. Yes.
It's a we are saying that payment system is like a infrastructure play, and it's like a long-term payback period, and it's a public good. I think the second call which the country has taken, it's a public good. So it can't be, obviously we also subscribe to the stand, and we say that it should make reasonable profits, but not obscene profits.
Yeah. It's going to turn to May, because you're sitting a little bit a card heavy market that hasn't really reached that scale yet. Intervention, not intervention. What do you think the pros and cons can be?
Yeah, great question. Thank you. You can hear me, right? Yeah. Yeah, great. Yeah. So I think hearing from Lars and Dilip, it's a different market. So I think it's really about what problem are we solving, and where are the underserved, overpay, overwhelmed population that we are serving. So I want to second the point about just talk about the infrastructure perspective. So it needs to be there's an economic, there's a pricing strategy. How can it scale? So from the adoption, I think from the government or incentive regulator, they can inject this acceleration of adoption. But where those adoption can be sustainable is questionable. So it's depending on, there's no cookie cutters in the world, because we are living in a very diverse world, and different needs that need to be solved. But it's looking at what the mix of those learnings that can apply to the different markets. So for example, as you mentioned, in Australia, we have good infrastructure. We are one of the 3 countries in the world do not have unbanked population, adult population, and yes, the card adoption is good. So that it can be a hindering of flipping that population, flipping that critical mass, the mass markets, to use the new payment if there's no sustainable pricing economic behind that. So I think from the intervention perspective, it need to be not just looking at the initial adoption or acceleration adoption, but it's a longer tail. How can it sustain that change and become not only from the consumer behaviors perspective, but what are the markets? Is it B2B, B2C, C2C, C2B, and how can make it more sustainable and not disrupt the bigger player in the market, because they still hold the power of influencing. So it's that how to bring that ecosystem to this change together, not making any player that is particularly disadvantaged on those changes.
Yeah, so it's still a bit of balancing act and see what kind of innovation will come on top of those rails in Australia.
Yeah, and yeah, absolutely, and the innovation need to be market suitable. So again, there's no cookie cutters for any player in the world that do right and then pick it up and put it in place, because every single market have different problem to solve and different need.
Yep. No, totally agree on that. Just going to get back to Dilip quickly, because if I have my numbers right, 90% of the payments that goes via UPI happen via fintechs. Could this be seen that the banks are falling a bit behind on payments innovation?
So, Camilla, I think, the way I would like to present, I think UPI is one of the first of its architecture, right, which does the unbundling, right? What I mean by that is the banks and the fintechs both can launch the apps, and the customers can use either of the apps to access the credit, debit, or a savings account or a prepaid accounts, right? So the money remains back within the banking channel. So the front end and the back end are two separate worlds, right? So the apps becomes the initiating channel, and the money movement happens within the trusted banking system, right? So now, obviously, the banks have been used to mobile banking, internet banking, kind of traditional banking channels. So when we launched the UPI, the fintechs were the first to start the apps, right? Today, the banks initially may not have fully understood what kind of impact the UPI can create. And, they, now we see many banks are launching their apps as UPI apps. But being said that, Camilla, that there is no risk in the system, right? Because the money remains back with the banking system. We have come up with the authentication and authorization robust framework is part of the UPI architecture, right? So we have built a secure library which goes inside every UPI app, on which only the authentication and authorization happens. We verify the credentials. We have two-factor authentication. So I believe that, and today it kind of gives the layer of innovation on top of the UPI layer, right? So it gives the opportunity for the fintechs, the banks to innovate. And I think it's an equal opportunity. I don't think it worries us that the banks are about 20% of the overall payments initiated versus the fintechs is initiating 80%, but 100% payments happens inside the bank. So I don't think it worries us. But obviously it's like the banks are very heavily regulated. So, the India, about 75%, 75 million people were using digital banking when UPI was started. The fintechs could actually give incentives to the customers to join UPI bandwagon, which bank had their own limitations in that sense. So yeah, I agree that the fintechs have taken the lead to convert the customers to UPI in large numbers, about 350 million active customers what we have on UPI on a monthly basis. But it doesn't worry us. It doesn't worry us at all.
No, I agree. It's a very strong symbiosis between that. Lars, did you want to add something to that?
No, but I think that I guess we are getting closer to the end of the session. I think that we can all say that we do need faster, cheaper, more transparent and safer payments, right? And there are many things we need to do in order to get there. It has something to do with standardization. We need to fix the liquidity issues, as was discussed in previous panels. There is a lot of interoperability issues, and I think the way to do this is actually it has to do with collaboration across industry, regulators, fintechs, banks, and so on and so forth. I just see a problem with someone trying to monopolize innovation, because to me, innovation is something, it happens outside in, right? It's the user, it's the clients, it's the ones that are out there that see what is actually needed. There are so many examples of just look at the mountain bike, for example. It was not designed as an office, 3 stories in a room with red walls and beanbags. It was people who was burning for it that came up with the idea. And I think that is really what we need to unleash and encourage. We need to encourage innovation, not trying to monopolize it and say that, okay, here we have an instant payments platform. It is going to work this way, this way, this way, this way. If you have a channel, you need to offer it, and so on and so forth. We need to rethink from a European perspective what collaboration across regulators, central banks, and the banks and fintechs, what it actually means and we want to achieve. I will stop there, Camilla.
Good. I don't know if can I have one more quick question, Conan, to May? Would that be
yes.
okay?
Yes, please.
Yeah. Because I think May has been sitting in all those roles. She's been sitting in the Paytech. She's been sitting at the partner at EY looking out, and now she is the infrastructure. What do you think we can do to assist more innovation happening on top of the rails?
Yeah, I have to echo with the other panelists talk about the collaboration. So it's not going to be just one party to do it. You need the whole ecosystem to collaborate, and think about that. It is now borderless. Payments borderless. It's fast, so it's enhancing that experience. How can we build all these overlay services and the experiences, and how can we think about adding the new value-added services to the customer, and who are the customer? What problem are we solving? And I think that this conversation cannot be just one-off. It needs to be continuing, and it's each of the pillars of the ecosystem need to bring together. And it's no longer just a bilateral conversation; it's cross-border, so it need to be multilateral, and it's constant to build on that, and not thinking about just monopoly or disrupt any other pillars. Is bringing that together and build a better experiences and services, and better, safer, cheaper, and fraud protection as well. It is a big thing and big topic when it comes to payment. And how can we look at the standardization? So do it once, harmonization. That's to bring the whole ecosystem together, and that everyone can innovate.
Yep. Yeah, I think that's right. And I think specifically coming back to that, the masses in the domestic is so important to take the friction away, so we get to the mass, so we build that trust so people can use it also cross-border, and then we are on the way rolling. But still a lot of work to be done. And I'm so grateful, May, Lars, Dilip, that you took the time to come and join this very speedy panel. It feels like we need to have a session soon. So Conan, thank you very much for this, and I'll hand back to you.